Today, the FOMC raised its policy interest rate by 0.75%, and we anticipate that ongoing increases will be appropriate. We are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%.
According to data from Investopedia, some experts have warned that Bitcoin could experience a new low, sending its price down to $12,000. A series of the macroeconomic events has been occurred, such as the inflation rates of the Federal Reserves. They have played a significant role in predicting the prices of the Bitcoins. Before we dive in the video, subscribe to the channel down below and turning on the bell notification so you'll never miss any future fascinating and interesting video like that one. The prediction has come at the time when the crypto market is in the red and the top cryptocurrency has lost about 60% of its value since its all-time highs. At the time of shooting this video, Bitcoin is trading at $18,900, a decline of 6% from its last 7 days. We can see that amid macroeconomic chaos, enormous crypto expert Dr. Profit have warned that Fed's decision will bring the bloodbath in the crypto market. He tweeted that, "Please consider Fed's next decision's upward 75 rate hike already priced in 1 BPS and we see blood." He wrote that Bitcoin has priced into the bottom phase at current levels. He also posted a price performance comparison between 2012 to 2016 and 2020 to 2022.
So when I say reset, I'm not looking at a particular specific, set of data or anything. What I'm really saying is that we've had a time of a red hot housing market all over the country where, famously houses were selling to the first buyer at 10% above the ask before even seeing the house, that kind of thing. So there was a big imbalance between supply and demand. Housing prices were going up at an unsustainably fast level. So the deceleration in housing prices that we're seeing should help bring sort of prices more closely in line with rents and other housing market fundamentals. And that's a good thing. For the longer term, what we need is supply and demand to get better aligned so that housing prices go up at a reasonable level, at a reasonable pace, and that people can afford houses again. And I think we probably in the housing market have to go through a correction to get back to that place. There are also longer run issues though with the housing market, as you know, where it's difficult to find lots now close enough to cities and things like that. So builders are having a hard time getting zoning and lots and workers and materials and things like that. But from a sort of business cycle standpoint, this difficult correction should put the housing market back into better balance.
The Federal Reserve was did a meeting and asked that we should raise interest rates by 3 quarters. Recently, reports of Goldman Sachs has been published and point out that Federal Reserve's benchmark rate hike might accelerate faster than expected. Let me take on Federal Reserve's interest rates press that was recently released. The Federal Reserve announces that it will raise its benchmark rate by 3/4 of the percentage point on Wednesday afternoon on its latest attempts to quash inflation. Chair Jerome Powell gave an update on the central bank economic outlook and the forecast for future rates hikes. So one question arises here, why has Bitcoin is dropped? The simple reason is that the decline comes after the long-awaited Ethereum merge was completed last week. Experts point to recessions, rising interest rates, Russian-Ukraine wars, and stubbornly high inflation as a reason for why we are seeing the slumpings in the prices of the crypto markets and the Bitcoins.
The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation anticipate that ongoing increases in the target range for the federal funds rate will be appropriate. We'll just have to see how that goes. There is a possibility, certainly, that we would go to a certain level that we're confident in and stay there for a time. But we're not at that level. Clearly, today we're just we've just moved, I think, probably into the very lowest level of what might be restrictive. And certainly in my view and in the view of the committee, there's a ways to go.
The Wall Street Journal tweeted that, let's check. Breaking, the Federal Reserve raised interest rates by over 75% and the signaled further large rises are likely as it combats inflation that remains near a 40-year high. Let's listen to his full statements right now.
I think we'll just have to see how that goes. There is a possibility certainly that we would go to a certain level that we're confident in and stay there for a time. But we're not at that level. Clearly today we've just moved, I think, probably into the very lowest level of what might be restrictive. And certainly in my view and in the view of the committee, there's a ways to go. There's what I would characterize as a relatively modest increase in the unemployment rate from a historical perspective, given the expected decline in inflation. Now, why is that? So really, that is what we generally expect, because we see the current situation as outside of historical experience in a number of ways, and I'll mention a couple of those. First, and you know these, but first, job openings are incredibly high relative to the number of people looking for work. It's plausible, I'll say, that job openings could come down significantly, and they need to, without as much of an increase in unemployment as has happened in earlier historical episodes. So that's one thing. In addition, in this cycle, longer-run inflation expectations have generally been fairly well anchored, and as I've said, there's no basis for complacency there, but to the extent that continues to be the case, that should make it easier to restore price stability. And I guess the third thing I would point to that's different this time is that part of this inflation is caused by this series of supply shocks that we've had, beginning with the pandemic and really with the reopening of the economy, and more recently amplified and added to by Russia's invasion of Ukraine, have all contributed to the sharp increase in inflation. So these are the kinds of events that are not really seen in prior business cycles. And in principle, if those things start to get better, and we do see some evidence of the beginnings of that. It's not much more than that, but it's good to see that. For example, commodity prices look like they may have peaked for now. Supply chain disruptions are beginning to resolve. Those developments, if sustained, could help ease the pressures on inflation. So let me just say, how much these factors will turn out to really matter in this sequence of events, it remains to be seen. We have always understood that restoring price stability while achieving a relatively modest decline, or rather increase in unemployment, and a soft landing would be very challenging. And we don't know. No one knows whether this process will lead to a recession, or if so, how significant that recession would be. That's going to depend on how quickly wage and price inflation pressures come down, whether expectations remain anchored, and whether, also do we get more labor supply, which would help as well. In addition, the chances of a soft landing are likely to diminish to the extent that policy needs to be more restrictive.
The Federal Reserve is set to raise interest rates this week. Here's why traders expect a 0.75% hike to trigger a crypto market rally. Bitcoin recovered from $90,300 on September 16 and rallied above $20,000 on September 17. But the bulls are struggling to sustain the higher levels. This suggested that the bears are active at higher levels. If the price continues lower and the break below 19,000, the Bitcoin Tether pair could decline to $18,500. Buyers are expected to define this level with vigor. On the upside, the 50-day simple moving average of $21,000 is the key level to keep an eye. If the bulls push the price above, it appears could rally to $25,000. A break and close above this resistance could indicate the start of a new uptrend. Let's check what expert says about this inflation rate. What is a Fed meeting? How does it affect the economy and the crypto market? Fed meeting has always caught the public attention, especially since the interest rate rise in the middle of the 2022. Recently, the FOMC committee announced a 0.75% rates hike on the 27th July, bringing the crypto policy interest rates of the United States of 2.25 to 2.50%. As of the June 2020, the Fed meeting decided to hike interest rates from 1% to 1.6%. The announcement has rattled the world economy, especially in the investment sector, as Bitcoin plummeted below 20,000 a day after the meeting, according to data from the coinmarketcap.com.
Today, and we are watching Bitcoin continuing its losing streak, the largest crypto asset testing a 3-month low, fluctuating around the $19,000 handle. It is now back up from that. The declines come as investors brace for further rate hikes from the Fed, with the central bank expected to hike by 75 basis points at its FOMC meeting kicking off tomorrow. Bitcoin is down significantly on the year, falling alongside other riskier assets in the equity space. Ether, by the way, also down on the day, hitting a 2-month low.
According to data from Yahoo Finance, Bitcoin continues losing streak ahead of Fed meeting. Well, time now for our trending ticker today. And we are watching Bitcoin continue its losing streak, the largest crypto asset testing a 3-month low, fluctuating around a $19,000 handle. It is now back up for that. The decline comes as investors brace for further rate hikes for the Fed, where the central bank expected to hike by 75 basis points at its FOMC meeting kicking off tomorrow. Bitcoin is down significantly on the year, falling alongside other riskiest assets in the quality space. Ether, by the way, also down on the day, hitting a 2-month low.
Crypto right now, so let's take a look at the interactive for more detail here. We can see that Bitcoin is down almost 2%. We saw it was falling under 19,000 this morning before starting to climb back up, but as you can see, they're still below that 20,000 mark. And we know that it's down 60% as well over the past year. Now that's partly due to investors really bracing for that jumbo 75 basis point hike from the Fed, and of course a strong dollar as inflation continues to persist. Now, especially you have Bitcoin, which really did lose its credibility as an inflation hedge when it started tracking its movements with equity markets. We also saw Forbes reporting that Fidelity is still considering following in BlackRock's footsteps by offering Bitcoin trading services to its 34.4 million retail investors. To its investors, that's going to be squeezing some of these retail investors. Now, regulators, of course, swirling amid some of the wild swings.
With the Wednesday daily candle about to close at FOMC today, the Bitcoin price has dropped as low as $18,000 on Binance. The previous September low was the Monday low of $18,000. The Fed announced a 75 basis points interest rate hike at the FOMC meeting early today, and initially the stock market and the Bitcoin rallied. Bitcoin hit an intraday high of just under $20,000. Both the SPX and the Bitcoin then crashed, recovered with a strong bounce of the liquidate late shorts, and finally then crashed against to a new daily lows. The S&P 500 dropped as low as 3,700. Crypto Chase predicted the Bitcoin price would run liquidity in both directions, liquidate both longs and the shorts with volatile wicks. The Darth Maul candlestick pattern before moving in its actual direction determined by Powell's speech. Other crypto Twitter analysts have also pointed out the real Bitcoin price action plays out in the days following the FOMC meeting, once the market have had times to properly react and pick a direction. Michael Von Depop, who has 627,000 followers, is exercising caution though the crypto markets appears to be pricing in the worst possible outcomes. But is optimistic it is a good time to buy Bitcoin now before 2023, a period he predicts will be an accumulation cycle. Trader Mayans, who has 326,000 followers, made an accurate Bitcoin price predictions before the FOMC meeting that 75 BPS would be announced. The Bitcoin price would spike and he should fear the pump. So far he has been correct, and if the continues to be, Bitcoin could sweep the $17,600 yearly low in the coming days. In a follow-up to it, Trader Mayan tweeted that, "I think PPL who accumulate Bitcoin between $10,000 to $20,000 and Ethereum between $500 to $1,000 will look pretty smart next cycle." Big Chad, who has 285,000 followers, posted a Bitcoin price prediction for 2022 of $12,000 back in March, and has continued to double down on it pre-FOMC and post-FOMC. He made a long-term Bitcoin price predictions of $100,000 for after the Bitcoin bottom is in. Mac Bitcoin, who has 36,000 followers also tweeted a Bitcoin price target of $12,000 for the bears market bottom and an Ethereum price predictions of $700 alongside Terra Luna going to zero and Solana at $17. It did not comment on Terra Classic, which was pumping earlier this week prior to the FOMC meeting. Crypto Chess tweeted that who has 99,000 followers posted a follow-up who has a pre-FOMC Bitcoin price predictions in the form of a meme and another $12,000 Bitcoin target. Altcoin Shilpa, who has 183,000 followers, predict Bitcoin will see bearish continuations in the days to come, inevitably breaking support and taking the liquidity below the $17.5 thousand level. The Federal Reserve has become a big believer in forward guidance over the year, starting with Ben Bernanke, with a central bank under Jerome Powell has taken a transparency to the new level. During a press conference after a decision, the first question came at Powell: how did the rapid change of plans play out? He responded that it is important now more than ever to provide even more clarity than usual. Let's take a look on this tweet. The Bitcoin price crashed this week after the Federal Reserve's chair Jerome Powell signaled the Fed will remain hawkish. The largest cryptocurrency is down about 6% since the Powell's hawkish August 26 Jackson Hole speech underlines that the Federal Reserve wants to be a subdue financial markets as a part of the push to curb economy activity and the certain price pressures. Bitcoin basically excited out upwards from that wedge and in doing so also regained that 200 EMA, holding it for a bit before losing it and once again visiting that $18,850 mark, basically before moving on back up from a spot and hitting that $19,500 resistance level. That's it for today. If you haven't already, subscribe to the channel and turning on the red notification bell so you'll never miss any more future interesting and fascinating videos like that one. So see you next time.